Good morning, everyone. Welcome to our Friday morning trading room. You have to bear with me here a moment. My screen share is working. My charts are still loading, as you can see. Things a little bit cool up here in the Pacific Northwest here this morning. We got a heavy frost on the ground, almost looking snow-ish, but I'm going to use that as my excuse for my computer being so slow here this morning. Fact of the matter is, I just have far too many programs open. From what I can see so far, though, it looks like it's a relatively soft start to the day with looks like a bunch of bars printing here very quickly, but not really going anywhere, which is good, maybe. So let's see here. We'll take a look here at the overnight shortly, but I can tell here from the Eagle that it looks like we were in a little bit of a downtrend. Just waiting on that last chart to fill. All right, let's get the trade manager up here. And then we'll get the show on the road, so to speak. Speaking of taking the show on the road, if I had a better internet connection in my travels, I could have hosted the trading room from a beach down in Mexico next week. But alas, the connections at the hotels rarely the same as being at home. Okay, I think I've got everything set up here correctly now. Let's take a look here at the daily chart, because that'll give us a pretty good perspective. This was yesterday's trading. What a wild and crazy day. Look at all that volume that went through there, and look at that bar. If we move left from here, we can see another bar very much like it. And you can notice all these bullish bars at the same time. This is a clue, to me anyways, it's a clue the market is turning bullish. I think we can anticipate a rally, if not today, over the next couple of days. And we're going to challenge here this top end, probably looking here somewhere around the 7,000 zone, 70.50. That's kind of my gut check on it. If the buyers are going to rally the market, they have to do it from here. If it fails at this point, well, they may well try to rally it from down here from around 6,500 again. But this was a very bullish effort. All right, so with that in mind, let's see what we can do here. I may even take a look at trying an early signal. Ooh, right here we had a very pretty little late filter entry signal. I think Mark just wrote. Yeah, Mark says that's my third late filter entry signal. Happy Friday, Eric. Mark writes, well, happy Friday to you too, my friend. Took two late filter entry trades this morning during pre-market, one to the upside, one to the downside. Both netted just over 150 per contract on two separate 7-contract trades. Made my day already, and the market hasn't even opened yet. Isn't that a nice way to start the day? Oh yeah, look at that. Pre-market, very, very steady. A lot of times the market will get busy about an hour before the open. So here we are about an hour before the market opens. A nice late filter entry signal there, no problem heading higher. And actually several to choose from right here. All of them at least going low enough to find the high probability profit objective. A little bit unusual to see this inverted V top without a bigger test of the extreme, but it can happen. And then here we have a third one, or the first one for the day, the official first one. Yeah, Mark says you should enjoy the beach. Trading will be here next year. Yes, it will. Ah, right. Les reminding me non-farm payroll at 8:30 Eastern. That's what would have sparked the market. That's a report to look for. The non-farm payroll and the FOMC minutes are market movers. Okay, and right now, we're definitely in a bit of an uptrend. Well done, Floyd. Floyd says, I'm done for the day. 2 longs at 5:14 Pacific and 5:39. The opening looks like a chop fest. I'm glad I'm out. Well done. Oh, don't tell me I'm going to have to get up earlier still. The best moves so far looking pre-market this morning. All right, well, we'll hang with them here for a little bit. They'll settle in shortly, I'm sure. But yeah, some low-hanging fruit here to start the day. Nice little hard edge bounce. While we're waiting for opening range to expire, as many of you know, I'll also do one-on-one coaching with you. And the interesting thing with these coaching sessions that I do when I deal with you on a one-on-one basis is it seems like it's always a bit of a learning experience for me as well to see how your mind works. I was doing a coaching session yesterday, and it reminded me of the importance of having an overall view of the market. Part of the problem that this particular fellow was having was that some of the signals were generating when the band was very, very tight. Just trying to decipher, okay, well, which signal should I take? Should I take, well, you can even go back here. Should I take the number 1 signal? Should I take the number 3 signal? Here I've got a number 1, here I've got a number 2, here I've got a number 3, a number 2, a number 3, blah, 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 blah. Which signal should I take? You will find that your better signals are going to develop as your band begins to expand. If your trading band is very, very tight, especially if you're looking left here and you see all this candy striping and you see signal upon signal upon signal, you're going to be in a market that's not going to be very cooperative, really. You're going to find your better signals develop as your band gets a little bit of width to it. Here, for instance, the number 1 signal working out. Here, a number 3 signal, the band a little bit broader. We have a little bit of a trend. Here was the number 1 signal. Now, this one, honestly, as it printed, you may have been at a loss because this also looking very, very sideways, the context of this chart. But certainly the next one should have made you think, okay, maybe the market's going to try to head higher. Maybe you want to try it. Maybe you want to wait for another second push opportunity. To help maintain a perspective on the market, it's okay to use other charts. It's okay to run a larger Raptor chart. You can run a 20-tick Raptor chart. It'll certainly give you a different perspective. If you're using the rest of the DTS tools, it's okay to look at the eagle. The eagle very often will give you that bird's eye view, if you excuse the pun, and you can get a better sense of what the market is doing. Here, it's a little more obvious the market is down. Here, it's a little bit more obvious the market is up. Before we developed the Raptor, a lot of people using the DTS package would use the eagle as their bias. They would look at the eagle and they would say, okay, the eagle is bullish. I'm only going to look for buy signals. And that's fine. You can certainly do that. It's also okay to use a time-based chart if you wanted. That's perfectly acceptable. I look at the daily. You could look at like a 15-minute chart to help maintain some perspective. Sometimes things look a little bit more obvious on a time-based chart. That's one thing with the Renko style bars, with the mean Renkos. If there's a lot of activity, you're going to print a lot of bars. Time-based charts, of course, only print after the time segment has been fulfilled. So it's okay, like I say, to use another chart as a reference to try to keep yourself on the right side of the market. That will help eliminate a lot of trades or a lot of potential trades. And then, of course, it goes back to the idea of not over trading. If you're over trading, stop it. I know it's easier said than done, but stop it. Because you will never, and I can say this with absolute certainty, you will never be a successful trader if you cannot be consistent in your profit. This is not a video game. Don't treat it like a video game. If you have the temptation that you feel like you're going to be playing it like a video game, go into sim mode. Go into sim mode, knock yourself out, try to learn. If you're looking at a signal and you're thinking, is this an early cloud crossover? Should I try to take that signal? If you're in sim mode, go right ahead. Take it. See how it plays out. Try to learn from it. But if you're using real money, you want to be on the lookout for your 1, 2, or 3 best trading opportunities on the day, because that's how you're going to make money. Like, I quoted here Mark already. He's up to 7 contracts. That's where the money is made, folks. He didn't trade 7 times. He traded, well, I guess 3 times now, and 7 contracts for $100 per trade. If you're terrible at math, that's $2,100. Yeah, Mark says, I like to use the Eagle every day for confirmation and correlation between the other charts. It's a good it's a good reference tool in that respect. And you will find your trades will work out better when your charts are in sync. In other words, your hawk is bearish, your falcon is bearish, your eagle is bearish, your raptor is bearish. Things will have a tendency, signals will have a tendency to be a little bit more reliable. But I wanted to take that moment while we're waiting and remind you about that, because that is a very important component to your trading. Another important component, which is often overlooked, is the actual market you're trading. A lot of people will run to the E-mini because they think, ooh, $12.50 a tick, I'll make more money. A lot of people will trade crude for the same reason. Ooh, it's $10 a tick. Crude oil is a faster market. I can make more money. Well, yes and no. You can lose more money. The thing, if you're trading, day trading an index market, and you're a smaller account trader, you want to be able to trade multiple contracts as quickly as possible, number one, and you want to be able to maintain a legitimate stop, a reasonable stop, which, to my way of thinking, means that you should try to keep your stop at least 2 swings back. So there's my signal. There's swing 1, there's swing 2. And in fact, I would probably give it a little bit extra and even go right there. So at $5 a tick, you can see the NASDAQ or even the mini Dow. This is not really asking too much. $250. Smaller account traders, people trading, $8,000, $9,000, $10,000 accounts. This is still within your wheelhouse. This does not exceed $5 or 5% of your trading capital, which is kind of that magic mark. If you can keep it under 5%, it's less likely you will blow yourself up. Well, at least blow yourself up quickly. There's no guarantee you won't blow yourself up anyway, but that you won't blow yourself up as quickly. This is only your initial stop. Your stop, of course, does not need to stay there. If you get brought in and the market starts to look like it's going to reverse on you, that perhaps you were wrong about the trade, you can look for your next reactionary bar, your next bar that is going with your trade, with your with trend, if you will. And at that point, you can start to roll your stops. Now, depending how aggressive you want to be, you can bring your stop in here, or you could even start to bring your stop in here. But I would probably bring my stop in around here, which effectively, not quite, but almost halves the risk exposure. So now instead of risking about $250, I'm risking about 120, 125, 130. If this amount up here initially was 2% of my capital, well, now this amount, I'm effectively risking about 1%. If this was 5% of your capital, now you're risking about 2 or 3%. These are the kinds of losses that are not going to wipe you out. All right. So again, it boils down to trade management and money management, doing more things right than wrong. And as it turned out, in this case, the market did eventually go down, hit our profit target. But even if it didn't, even if it came up and tagged me out, like I said, I still did more things right than wrong. I could have, or I would have considered this a good loss. I did everything correctly. The market just didn't feel like heading lower. All right, so there's your little pep talk. Oh, Floyd says the Russell and the mid cap both on the rally. All right, well, we're almost, opening range almost expired, and you could see here from the daily chart that the obstacle is yesterday's high. Looks like we hit the high here on Tuesday and Thursday, and so far Friday as well. So I think I'm going to be maybe a little on, have a bit of a bullish slant here today. And in fact, I might even consider this an early cloud crossover. The problem with this trade is going to be covering it down here. But if I get the early signal, I may still be able to afford to keep my stop way back there. The danger, of course, is a retest of the low. Oh, look at you guys. Should have been a little quicker on that. Come on, give me that pullback bar, and I'm going to treat this as my early cloud crossover. Now, the early cloud crossover, it's not printing as a signal. The next buy signal that prints will be a number one signal. I can risk it about halfway. This is kind of my limit. All right, so no signal printing. We got the warning dot. Again, I'm treating it like an early number one signal. Oh, and I forgot I was going to go with my stop limits. Here now, the proper number one signal about to print. There we go. And you can see the advantage actually of getting in a little bit earlier made it a little bit easier to find my profit target. All the elements were there of a number one signal. The clouds just not fully crossed. We had the clouds crossing, we have the pullback. In fact, we had the pullback here, and we had a mini pullback right here. And that made for a great little opportunity. Ran up, hit my profit objective. The world is a wonderful place. You're going to find one of the biggest challenges, I'm not going to call it the biggest challenge, but one of the biggest challenges as a trader will be waiting for the right opportunity. That's something successful traders do well. You won't see successful traders chasing every single signal around the block. They are prepared to sit and wait and wait and wait as long as they have to. Yeah, like Vincent says, you should ambush your trades. Yes, absolutely. It's hard to do. You know, you look at your chart and you see this monster move up and this monster move lower, and you think, wow, you know, this is how my cousin Marvin likes to trade. And I'm using air quotes when I say trade. Wow, Eric, you know, if we had sold it up here off of this sell signal right here and you know, took it all the way down here and then reversed and took it higher and then, you know, got out right here and reversed and took it lower. Yeah, Marvin, that's great. We should trade like that. Of course, the only way you can trade like that is if you get in your time machine and go back 20 minutes. Trading real time is a different story. As Ray Burke always used to say, trading the left side of the screen is easy. Trading the right side of the screen, not so much. I used to think of it, especially when I traded the bonds, because the bonds trade at $31.25 a tick. And arguably, bond traders are the smartest traders in the world. They're not going to be fooled very easy. In fact, what I used to do when I traded the E-mini is I would run a bond chart right next to it. The bond market and the stock market tend to have an inverse relationship. In other words, if the stock market is going up, bonds should go down. And vice versa, if the stock market goes down, bonds should go up. If I saw a move in the E-mini, let's say the E-mini was going up and bonds were not going down, then I had a pretty good idea the move would not stick. And so that was kind of my confirmation move. But where I was going with this, at 31.25 a tick, I would only trade for 3 ticks. And I always had the mentality that I was picking the pockets of the bond traders, because no doubt they were a lot smarter than me. I'm sure many of them had PhDs, you know, just very, very sophisticated, very, very smart traders. So I would go in, I would pick their pockets for 3 or sometimes 4 ticks and say thank you very much. And if the market kept going, you know, after 3 ticks, made a 30 or 40 tick move, well, then so be it. I still got my money. Thank you very much. And again, it's not in the frequency. If there's one thing you take away from the trading room this year, try not to trade too often. Try to focus on the best opportunities. Floyd sent me an email here. He says, please share. Check out the email. Please share with the group. It's on my trading desk every day. All right, let's see here what Floyd sent me. Patience and wisdom. Here's a search for The wisdom of patience. I'm not sure which one of these Floyd was going with, but yeah, how true. How true. You can't rush some of these things. Certainly trading falls within that category. Oh, I see. Okay. Floyd says the dog with the photo on the top. Okay. I see where he's going with this now. Hold on a second. Let's see if I can make it larger. All right. Well, that's the best I can do with my technical abilities. Two of the greatest qualities of life are patience and wisdom, as the skunk helps himself to the dog's food. Yes, pick your battles. That's great. All right, so here we go again. It looks like we're going to try to challenge the highs again. And here we've already produced the number one signal. This is a really, really drawn out second push opportunity. As you can see, the number one signal back here would have been a little bit more effective, but let's see if we can't get maybe a number three signal to print. Or here too, you could put your just in case order up there. We do have a little bit more of a bullish slant on the morning. Yeah, Floyd says the skunk is the chop. Wait for him to finish before you eat. Perfect. I love it. Okay, this didn't encounter the hard edge, but it's very, very close. The next signal that prints right there, you could interpret as your number three signal. Now, again, this is a visual number three interpretation. It's not printing as a number three, but visually it has the potential. Okay, now we're actually into the hard edge. And with this second push, well, we're trying to stay on the right side, not engaging the market until it can actually get high enough to fill our order. And there you go. It could not. So let's close that out and leave it alone for now. You can see the band starting to twist up a bit, getting a lot of candy striping back here. For those of you joining late, just a reminder, this will be the last trading room of the year. I'm away next week until after Christmas, and then of course trading between Christmas, New Year, a little bit on the dismal side. So we'll resume things in the new year. I will send out emails so you have dates that you can mark on your calendar. Now everything turning very bearish. That number two signal, just fantastic follow through off of this number two signal. Another tool, while I think of it, very, very simple tool. is just your basic trend line. If you encounter the market in a bit of a pullback phase, just shoot a trend line. Always go with the more conservative trend line. Like if you're torn between this trend line and this trend line, even though both prove to be effective, you'll probably be better off staying with the more conservative one. So here's a little bit of the bearish trend line. The market breaks, you produce a number one signal, and away you go. Here the market breaks. It moved too quickly, but here's your number one signal. And, well, it kissed the profit target. You probably would have got a break even, or if you're not running an auto break even here, now you have a chance to take your stops from up here, and I would certainly bring them down here. And maybe even manage the trade a little more aggressively, only because personally I have a little bit more of a bullish take on the day. But if this heads lower, there's a good chance the market will try to continue lower. Just simple tools to try to give you an accurate perspective of what the market is up to. All right, so I'm thinking now, maybe, just maybe, the market is actually going to be a little bit more bearish today. We'll see if we get a number three signal developing here, or even just a discretionary signal that will allow me to follow up. Getting some green warning dots here in the Falcon, so there is a little bit of bullishness, a little bit of support. I'm not liking, when we get signal printing after signal after signal after signal. That makes things certainly a lot more difficult. Here we have an eagle signal down here at the low. This was just our basic trend change signal. Okay, well, don't wait too long here, Eric. Darn eat. I was checking out the other charts. Well, I really never got a hard edge bounce through here. The eagle gave me, the Falcon gave me a trend line touch. I could have hopped on board. And I had a 4-arrow consolidation back here in the hawk. So there were a couple of signals there. Another rather sloppy looking 4-arrow consolidation, but there it is. Oh, don't run away. A little 4-arrow consolidation. Ooh, that's a little on the rich side, but let's see if we can't get some follow through on that. Oh, I should be using my stop limit order. Come on, hurry, hurry, hurry. So 1, 2, 3, 4 signals. Typically, the hawk signal is more desirable, the 4-arrow consolidation, when it has this little bit of a bear flag to it. This one, less desirable because it has a little bit of a slant like that, but I'm hoping that the downward momentum will override. And sneak me a little bit lower. We're stumbling a little bit here at 6,800. Oh, come on. You can do it. There we go. A quick little scalp. Thank you very much. Well, you can see here was definitely an opportunity for a trailing trade if you were, again, in the position to take multiples. Besides the fact that multiple contracts help improve your earnings, they also give you flexibility with your trade. They have the ability that you can allow you to leave a runner in play for those times that the market does still take off. But I think, as a rule, when in doubt, I think you will find that you'll do better going all in, all out on target. And besides, there's no point in being greedy. So I've had 2 profitable trades. If I were running my trade quota, my day would be done. I could go back to sorting my luggage for my trip. Yeah, Mark says, wow, what a sharp move lower. Caught me by surprise too. I was expecting a move down, especially after we broke here. I was going to get on board with this Eagle trade, but I was a little bit late. When this was developing, I wanted to get on board this second push opportunity because we saw this little bit of a break, a quick little retest. I wanted to set it up to take it something like that. Unfortunately, by the time I got around to it, they were already down here. But of course, in hindsight, it didn't matter because the bottom just fell right out of the marketplace. That's okay. There will be other opportunities. Like I say, the biggest challenge to you as a trader will be developing the patience, or not the biggest challenge. One of the biggest challenges for you as a trader will be developing the patience to wait for and the ability to identify your best high probability opportunities. That was a pretty big move lower. Look at our trading band here. We're well over, well, not well over, but we're over 90 ticks. What do we think? A reversal? So here we have a little bit of a swing now in the eagle. You could look for a little bit of a bounce back. I'm not sure I would look for the full 200. Oh, they're having none of it. And the trading band still very, very broad. This is the kind of type of situation where you may entertain a number 2 signal. Now, bear in mind the counter trend signals, you're stepping in front of a freight train here. But if the condition is right, we're going to get a buy signal. Let's see if we get a little test of the extreme. I'm going to lock this on a manual mode. There's the number 2. Just buy in. Stops go below the low. Not too tight below the low, but definitely below the low. And we'll see if we can't sneak it up here just a little. Come on. Oh, yes, stinkers. Okay, well, here's another chance. If we breach there, we will have yet another number 2 opportunity. Okay, so this now a follow-up number 2 signal, and again, just trying to sneak a few ticks out of this on a possible reverse off of a very, very broad trading band. Now, again, counter trend move, lower probability. I know that going in. Come on. There we go. Whew. All right, got it. Hooray for me. Well, if I didn't have my trade quota made before, I definitely have my trade quota made now. And so if I were still inclined to hang out for the rest of the session or even the rest of the morning, this would be the time that you want to move into sim mode. You've made your trade quota. We've gone 3 for 3 on the trades. So we have a nice little profit for our efforts. We're up $250 on single contracts. So if we were trading 2 contracts, that's a $500 day. 3 contracts, $750. 4 contracts, $1,000. And yes, in hindsight, it could have been so much more. You know, if I had runners in here, we're going to call these Marv trades in honor of my cousin Marvin. Yeah. If we had sold it up here and then, you know, got out down here somewhere, and now we're looking at a reversal, and we'll see whether we should have bought down here. Wasn't it Will Rogers or somebody like that who said trading stocks is easy. If the stock doesn't go up, I don't buy it, or something to that effect. That's a pretty lame paraphrase, but we did okay. We picked their pockets. We made our money. We didn't lose any money. Mark, do you still put a runner in play? I know you were experimenting with that for a while, or are you strictly all in, all out now? In fact, I could do a little room survey, see what the preference is. But I think if you track your results, certainly I always recommend the smaller your account, the more inclined you should be to go all in, all out. All right, well, we definitely have a little bit of a sideways trading range developing now, and as such, we could be on the lookout for the eventual breakout. And once we see the breakout, higher or lower, we'll be able to frame our trade a little bit better. Yeah, Mark says, I've been all in, all out. I adjust my profit target based on the volatility. Okay, well, that's a good way to go too. If it looks like it's the type of day where there's going to be larger follow through, then yeah, expand your profit target a bit. And vice versa, if it's the type of day where you're not having much follow through, you can tighten things up. Yeah, so Mark says, I'm generally averaging about $87 a contract after commission. Oh, yeah, good question. Floyd's asking, could you ask Mark how he measures volatility? Is it just visual, or because I know Floyd likes using the ADX, which is a pretty decent volatility measure. Mark says I look at the VIX and the daily volume. Yeah, okay, that'll do it. Okay, waiting for a break out there to get outside that trading range. The VIX, for those of you who don't know, is it's a volatility index. Its symbol is VIX, and it's kind of a guesstimate of market volatility of the CBOE. It's also based on the S&P 500, but you know what happens in the S&P happens everywhere else. All right, here we've got a breakout now from the trading range. Here's the retest. You could put your little just in case order below here. Let's use a stop limit. This not super inviting, but we'll see what happens here. Exit stops should go a little ways away, at least initially. My eagle is still giving me a hard time. Okay, I'm gonna have to do it this way. I'm halfways expecting this breakout to fail because we spent so much time going sideways. It kind of shows the sellers not as strong as they were through here, right? They wasted very little time on any pullback. Little pullback, boom! Another little pullback, another slap in the face. And now all of a sudden, they go sideways for about 10 minutes before breaking lower. That's not always a good sign. And yeah, see, here we go. Very likely to reverse. In fact, if I get a bar lower, I will definitely bring my stops in. And you could even consider a reverse. All right, so there's ideally 2 bear bars. Come on, give it to me. All right, I'm going to be a little bit more aggressive on my stop. Like I say, a reverse here now, a little bit more likely. We're probably going to get a rule of 3 type setup. And you could, I don't normally reverse on my positions, but you could look at buying above here as well. Try not to get your orders mixed up. Things can get a little bit crowded. Oh, and they didn't, for whatever reason. Oops, hold on a second here. For whatever reason, my ego acting up here a little bit. And you can see, the problem with trading more often, right? We were 3 for 3. If you keep dipping into the pool, well, you kind of screw up your day. And here we are now back inside this trading range. What's interesting about this particular range, like I said, we had the market come down really, really fast, and then all of a sudden it started to stall. Then all of a sudden we got a breakout or retest. It only went a tick or two lower, and then started to reverse. I forget what I was looking at, but I could have been much more aggressive with my stops on this, knowing the failure to head lower is likely going to send the market higher. But here we are, dead sideways again. So you can probably anticipate more than a few fake breakouts from here on out. Trade forecaster says we're in swing mode for the next hour and a bit. So that's pretty much going to put the nicks in the wrinkle, as they say. The hawk, a lot of yellow bars already starting to cluster. The Falcon's starting to get that roller coaster effect. I have a feeling a few people are thinking maybe that was the move of the day, and time to pack up and go home. I did have a bullish slant on the day, but not anymore. Well, we're right in the middle of where we were yesterday. Where's my daily? There it is. So yes, so far a bearish day, but obviously buyers really digging in around 6,600. So the lower the market goes, the more we're going to see some bullishness try to show up. I would not be surprised to see this day finish on a bullish note. I'm just glancing at some of the financial news. And you know, next to lawyers, and I apologize in advance to lawyers in the audience, but economists should be drawn and quartered. They're always out there forecasting doom and gloom because honestly, there's no downside to it. If they forecast hard times, then if it comes to pass, they can say, "See, I told you so." And if they were wrong and it's good times, then nobody cares. But if they forecast good times and the market has a downturn, well, then everybody remembers, oh, you said things would be good and things are not good. Scoundrels, all of them. All right, well, here we came out with another bear break, another bearish break, another retest. This one, as you can see, would have been a little bit more reliable, but even if it was unfolding like this, if I wasn't reading my online news, I would have tried it. And the reason is this now a little bit stale. So we saw the bearish break, no follow through. We saw the bullish rally, no follow through. Another bearish break, another retest, another attempt to move lower. That's worth trying. And that would have had some decent follow through to it. Okay, a very decent move lower there. I've got a couple people asking here about the VIX. Mark poking the, well, actually, it's Floyd's fault for asking. No, I'm just teasing. You can do a simple Google search for VIX, and I have a tendency to go to the source. So the CBOE website, they have a VIX index, and there it is. And this is the 3 month, so you can go intraday. It'll be delayed. Oh, actually, it's only delayed 5 minutes, it looks like. That's pretty decent. But all you're looking for here is, you know, the amount of volatility. They call it, the nickname for the VIX is the fear index. But there you go. You can, for those of you interested, just go to the CBOE website. Try not to get too hung up on, you know, all the different bells and whistles. Adam used to call it mental masturbation, because you can go down all these different avenues trying to find that one little component that will all of a sudden turn around your trading. So you will never, ever, ever be wrong again. They can save you a little bit of time. Yeah, Vincent says, how about mental castration? Yeah. Paul's asking, what size VIX? Let's see the CBOE website. Hold on just a sec. Here we go. On the intraday, let's see, it looks like it's producing every 2 or 3 minutes. There's loads of stuff on the internet. If you want to learn more about it, you can, a simple Google search will bring up tens of thousands, if not hundreds of thousands of websites Yeah, see, Phil giving us the Reader's Digest version here. If the VIX gets up over 16, things get a little bit brutal. Yeah, Paul says, I've downloaded a VIX chart and have it set at 15 minutes. I'm sure that's fine. Again, folks, it's not the secret sauce. The secret sauce is finding the best opportunity, whether that be, identifying a trading range, looking for a breakout, looking for a retest, looking for an opportunity. That way, whether it's using a simple trend line as a guide, we finding a trend, waiting for a pullback. There's a break. Where's my next signal? There's my next signal. Not risking more than you can afford. Find a high probability opportunity. Don't overtrade. Capitalize correctly. That will do more for you than trying to optimize your settings on your stochastics or your MACD or your RSI or starting to follow VIX. Yeah, see, here we go. From the horse's mouth. Don't take my word for it. Mark says, use only what helps you make a decision or helps your overall trading and scrap the rest. Unfortunately, a lot of traders can get hung up on all kinds of combinations of things to a state of frustration. The KISS principle, please. And it's so true. It's so true. And, like I said, if you want to learn about the VIX, then by all means, knock yourself out. But don't think that it's going to be the be-all, end-all. Because it won't. This morning I showed you a couple of tools that you can use to try to stay on the right side of the market. Everything from consulting a time-based chart, maybe going to like a 15-minute chart. See here, you can see, okay, things obviously a little bit more bearish now. So, all right, so we're going to focus on maybe selling opportunities. Oh, but wait. We're kind of at this support zone. So maybe we have to wait and see what happens here. Right? Maybe this won't be the best place to trade because, well, let's face it, things are a little bit dicey. All right, so there's one thing that we can do. We can focus on perhaps another chart to give us a different view of the market. We can use trend lines. We can, use like our ATR. We can wait for the trading band to get a little bit broader rather than try to trade when it's all twisted up. Phil's asking, what brick size and indicator Renko bars in the Raptor can I change for a longer term chart? All right, let's take a look here. Oh, first, I'll show you the data series. So to increase your brick size, you need to go to your data series window. And from here, you can change it really to whatever you want, obviously. It's okay to experiment. I would probably recommend a 20 tick brick. If you're looking for like an overview of the NASDAQ market, a 20 tick brick on the NASDAQ will probably serve you reasonably well. Once you've changed your bar size to 20 ticks, you'll need to adjust your Raptor settings. So then you'll go to your indicator window. You'll find your Raptor 2.0, and then go down here to where your clouds and your hawk sizes are. Now, make a note of this. This is the rough relationship between your clouds and your brick size. Your slower cloud is 1.5 times your brick size. You can experiment, but these are the standards. These are the defaults. So if you have a 20 tick brick, 20 times 1.5 is 30. Cloud number 2 is the same size as your brick size. So if you have a 20 tick brick, this will be 20 ticks. Your hawk bars are 75% of your brick size. So if you have a 20 tick brick, 20 times 0.75 is 15. So there, your hawk size brick hawk bars will be 15. All right, so you'll have 30, 20, and 15. And that will give you a pretty good perspective on the Raptor. It will actually look more or less like your Eagle. Kind of give you that same look. All right, so we were bullish. Now we're kind of flirting with a trend line break. Let's see if we get any sell signals here. We've already got sell signals here on the hawk. We had a trend change signal and a couple trend line touches here on the falcon. We're going to maybe get an early cloud crossover here on the Raptor. Come on, give me a little bit of a pullback here. All right, there's a couple bar pullback. Again, this is like an early cloud crossover. You could have even gotten on board here off of that trend line break, but all right, here now the proper number 1 signal as the clouds now fully crossed. Oh, don't flinch yet. Come on. There we go. Okay, so you can see fairly straightforward. We're kind of taking the overall perspective of what's going on here. We noticed the break of the trend line. So what do? We look for an opportunity. Where are we producing signals? And we had a plethora of signals to choose from. Both here, some early signals developing here on the Falcon. Early signals also on the Raptor, but we had reason to be a little bit more bearish. Even if you waited for the proper number 1 signal. Now that we've gone a little bit further, whenever you see the market move really, really quickly like this, you should anticipate a bit of a pullback. So I would probably hold out for that second push signal. So all that means is we allow the signal to engage. We look for that reactionary bar. There it is. And then we place our entry. And this is why, because the the potential of the market to not follow through. After a steep move like this, right? There's a very, very steep move. What are we missing? We're missing the test of the extreme. That's what we're witnessing right now. The bullish rally to see whether the buyers still have it, but it doesn't matter because we've already taken our profit. Thank you very much. All right, boys and girls, if anybody has any other questions, please type away. And I will do my best to deal with it. I will still be available via email, but it will be spotty. So Adam's going to help me out and actually field some emails for me. I don't know if he's going to just reply in my name, which he very well might. But yeah, feel free to email me, and I will do my best to get back to you. But for the most part, I'll probably be spending more time at the pool bar instead of the internet cafe. All right, no questions. Okay, gang, I think we're going to close up shop here for the Friday. If you're going to keep trading today, well, we're at a pretty significant support zone. Remember, the lower we get, the more likely it is the buyers are going to try to pick this up. So don't be surprised to see a little bit of a bullish push. In fact, I think we're going to see it right now. If we shoot a little trend line this way now, look for a little bit of a bull break here, and then look for an excuse for one of your follow-up signals to get you long. I think that'll take you through the next 20 minutes, half hour. All right. Yes, thank you, Mark. Thank you all for your best wishes. I wish you all a very happy holiday season. Merry Christmas to you and a Happy New Year. And I will talk to you next year. All right, gang. We'll see you then. Bye for now.